I'm Michael Fox, and this is the Prospector Podcast. And I have joining me regular contributor Jeff Christian, the founding partner of the CPM Group. Welcome back, Jeff.
Yeah, thanks for having me back, Michael.
Yeah, this is the old Chinese curse. May you live in interesting times, and we certainly find ourselves in interesting times right now. For our listeners, this is going to be a little bit different. Yeah, we are going to talk about precious metals as we always do with Jeff, but this particular conversation is going to look at the precious metals markets through a political lens. The U.S. election is coming up. We're here on October 1st, so we're approximately 5 weeks away from the election in the United States. This conversation is not about handicapping the election. We're not here to pick any winners, cheer for any sides. What we want to have is a pragmatic conversation of what's likely to happen leading up to the election, through the actual election cycle going into January, and then take a look that if one side versus the other side is victorious at the end of it, what's the likely road for precious metals going forward from that standpoint. So let's start things off. We're 5 weeks away from the election. What should we be looking at for precious metals? Gold's touched all-time highs. Silver's been way up. Where do things go from here?
Well, we think the markets are going to be pretty volatile. We've been saying for some time that we thought that the prices of gold and silver would probably rise and rise around this time. So the last 3 months of 2024, the first 3 months of 2025. And that's actually for a variety of reasons. But the U.S. election, and not just the presidential election, but the congressional elections are very important too. The U.S. election is definitely adding a high degree of uncertainty politically, domestic politics, and international politics. There's a whole lot of things in play. There's a whole lot of jockeying going on, as well as economically what's going to happen. And so there's a we were in an uncertain time heading to even more uncertain times. We're in the late stages of a mature economic expansion. We're seeing interest rates cut because we're seeing signs of economic weakness increasing, even as we're seeing continued economic strength in most parts of the economy, in most parts of the industrialized world. So you were in an uncertain time, headed to more uncertain times already. And then you add in the U.S. elections, as well as other elections elsewhere, and you say it's just going to be really strange. So we're looking for increased volatility with an upside bias for the next 6 months, really. The month now into the election, the 2 months immediately following the election, but also as you get into the first quarter of 2025, you've got the certification of the votes, which Mr. Trump has said he will argue against if he loses. And then you have the inauguration, and then you have the new Congress coming in at the very beginning of January. And then you have this inaugural beginning of a new administration. And even if, Kamala Harris wins, so it's ostensibly a continuation of a Democratic administration, I think her presidency would be radically different from the Biden presidency. So I think there's a tremendous amount of stuff that's going on over the next 6 months. We told our clients several weeks ago, we structured a butterfly option strategy that we used in 2016 to great advantage, just assuming that whoever wins regardless of who wins the presidency in 2016, we said, will lose. There were two people who promised to be poor presidents. Regardless of who won, the United States would lose. And I think we saw that very clearly. And we structured a butterfly in October of 2016 that, gained 125% value between then and election day. And we structured another one a few weeks ago in September. And as of last week, it was already up 100%. And we told our clients, don't liquidate it because we think that it's going to get even, the uncertainty will grow even more. And the value of that butterfly option strategy will probably increase even more. And we do really sort of see that going. So it's very interesting times.
Yeah, I've noticed there's been an uptick of activity on the world geopolitical standpoint. You know, you have Zelensky of Ukraine running around trying to shore up his support so that he can continue to defend himself against the Russian invasion there. You seem to have Israel looking for bigger, wider fights on their borders. You have Iran now stepping into that fray as well. And if that's not enough, you have President Xi of China suggesting that, it's inevitable that Taiwan becomes part of China again. Am I missing any other black swans geopolitically between now and November?
Well, first off, those aren't black swans because you can see them, right? A black swan is something that you don't see. There are other things, and I'll mention a couple of them, but then we can go back through all three of those, because it's very interesting what you're seeing now and what you may see post-election in each of those instances. But the U.S. election clearly has an effect on those. But you're also seeing a lot of political dissent within the United Kingdom. And you're seeing Scottish agitation within the United Kingdom. Within the EU, you're seeing all sorts of trends. There's the rise of the conservative or hard right. They're not really conservative. They're more nationalistic and nativist right-wing parties. But you're also seeing a lot of other entities within the EU saying, maybe the British had it right. The majority of British voters now say they wish they had never left the EU. Meanwhile, in the EU, there's a growing percentage of voters who say maybe the British had it right and we should leave the EU too. So that's going on. In Russia, you have a lot of political dissent that's growing. It's obviously not very obvious because it's all suppressed by a autocrat, but there's a lot of signs of cracks within both the highest levels of power within Russia and among, rank and file citizens within Russia. You have Zelensky who's sitting there, Mr. Trump has said, I'll give Ukraine to Russia. He's said it, so Zelensky is clearly trying to get positioned to use longer range missiles against Russia now because he's worried that if Mr. Trump wins, he's toast. But again, if Mr. Trump wins, he doesn't become president until late January. So then you have this whole thing. What would a Biden administration do between early November and late January to help Ukraine in advance of a transition of power to Mr. Trump? But Zelensky clearly wants to. He's got greater military and political power and clout now in the war, and he'd like to capitalize on that. And he'd like to do it now rather than a month from now or 3 months from now. So that's the Ukraine-Russian situation. In the Middle East, Mr. Netanyahu seems to be thinking that whoever wins in the United States, there may be less government support and government supply of offensive missiles to Israel post-election. The Biden administration clearly wouldn't do that prior to the election, but it could do that post-election, as could a Trump administration next year. So Mr. Netanyahu seems to be taking the approach that he really needs to accelerate his militaristic anti-Iran clients actions now. You do have the risk of a nuclear tip bunker busting bomb dropped by Israel on the nuclear research facilities that are underground in Iran. In 2007, 2008, Cheney was advocating that, certain parts within the Israeli government and military, certain parts of the US government and military were advocating doing that before the election. And George W. Bush, to his credit, said no. But you've got a situation where that could happen before or after the election, which would do all sorts of things. The Iranian government, on its part, is trying to poke the Israeli government and the US government so that it can provoke any such activity before the election, because it feels that after the election, it's that much more vulnerable to a much more forceful Israeli militaristic reaction. And then you've got China, and you have issues within China, and you've seen some recent reforms on the economic and fiscal side, backing away from some of the stringencies that have caused lower economic activity. And the Chinese government itself has sort of backed off a little bit about the inevitable, we're willing to use military force if necessary to reunify Taiwan. They've kind of backed away from that, although they've gotten more militaristic against the Filipinos in the South China Sea, and against the Vietnamese, and against the Myanmar government, and against India and Pakistan along their southern borders. So you've got a lot of those things that are kicking around. And you've got governments that are sort of jockeying, what do we do before the US election? And then depending on who wins the US election, what do we do in that interregnum period where Biden is still the president and the Democrats are still in charge, but you may have a new Democratic presidency, or you may have a Trump Republican presidency, and you don't know what the balance in the Senate and the House of Representatives is going to be. So there's going to be a lot of things going on prior to the election. We've been saying we don't think there's going to be an October surprise. We think there's going to be 2 or 3 October surprises on both sides. And then after the election, you're going to have repositioning on all of that. Now, all of that I just wasted all our time on, that's just international affairs. Then you have the domestic affairs, you have the domestic policies that the same sort of dynamics are going to apply to. So you have this really increased period of uncertainty and volatility, and that is going to be reflected in increased investor interest in gold and silver leading up to and following the election.
Yeah, you talk about October surprises. What type of surprises are you referring to? Are you talking something domestic or something international, or both?
I think that both sides are looking for a spectrum of things to reveal or to do. So I ran through some of the October surprises that could happen in Ukraine and the Middle East. I don't think that you'll see an October surprise between China and the rest of the world, or China and the Philippines, or anything like that, but it is possible that something could get provoked. But I think you'll also see some, let's call them personal surprises, where there are certain things that could be revealed about J.D. Vance, about Trump, maybe about Harris and Walz. I think that both sides are scrounging for such information. And you could also see some domestic political surprises and revelations that could radically shift the nature of the elections. But then again, we're just talking about the presidency. You really have to look at all of these different congressional seats and gubernatorial seats. Look at what's happening in North Carolina. And if you go around the country, you'll see any number of seats that are at risk and up for change. And there are revelations on the part of both candidates, or one candidate or the other, as to whether or not, a person is suitable for electionability, let alone leadership within a state government or a congressional position. So I think there's a lot of moving parts there. And I think I wouldn't be surprised to see various revelations, personal, domestic, and international, over the next 5 weeks.
Now, certain foreign governments, and we'll mention Iran here in this particular example, have been looking to affect the U.S. election. Is there going to be a surprise where a foreign interference is actually revealed in October, and what's likely to happen if that were to occur?
I think the only surprise is that there will be people who will be surprised. I mean, the idea that Iran, China, Russia, and probably any number of other governments are flooding the US social media with garbage shouldn't surprise anyone. What's surprising is the extent to which people believe what they read, and that's probably going to continue. So I'm not sure that that's a surprise, but it's definitely happening, and it's happening. I think that somebody said that they estimate that Russian fake websites are 10 times greater now than they were in 2016.
Wow, and there was a lot of them in 2016.
There were a lot of them in 2016.
So we've got the lead up to the election. There's lots of mayhem happening everywhere. So we're expecting the precious metals to be very volatile. So now we're the eve of the election. It's election night. We're too close to call at this point for a lot of things to make up Congress, the actual presidency, even some state governorships. The election happens and we still don't have a winner. What's going to happen in that period between, November and January, while we try and sort out who's actually in charge going forward?
It's going to depend on what the lay of the political landscape is at that time. If it looks like a Harris victory, our thinking is that you could see some pretty heavy profit taking in gold and to a lesser extent in silver. To some extent in silver, you've already been seeing a lot of heavy profit taking just in the last few weeks, not based on the election, but based on the fact that the silver price got, to $32, $33 an ounce. And there were any number of people who were waiting to see those prices to sell silver that they had bought in 2021. And coin dealers have been overwhelmed with silver coin sales and silver bar sales. But in gold, I think that if you saw a great deal of uncertainty and we don't really know who's going to be in charge of the Senate. We don't really know who's going to be in charge of the House. We don't really know who's going to be president. I think if the consensus seems to lean toward a Harris presidency, you could see the gold price come off, and it could come off to 2,500, 2,550. And people say, "Oh my God, that's really low." Yeah, that's where we were in early September. Yeah, less than a month ago we were there. And, if you go back 2 months to early August, 2 months ago, the price was 2,400. So we could, if it's leaning toward a Harris election, I think you could see gold come off quite significantly. If you're leaning toward a Trump presidency, I think the gold price will hang up higher because that suggests larger deficits and more volatile government and fiscal policies, similar to what we saw from 2016, 2017 to 2020. So I think that, if you want to put it this way, if you want to voice it this way, a Trump victory or a leaning toward a Trump victory would be better for gold prices to stay higher. Whereas I think a Harris victory would probably see greater profit taking. And I'll say this, the gold market has shocked a lot of gold market professionals for the last, say, 2 months, where the attitude has consistently been the gold market is overly long and is due for some liquidation of some of these longs. And the longs haven't been liquidating. They've been holding on the same way, I explained with the butterfly option strategy. Hold on to that. It's up 100% in a week or 2 weeks, but that doesn't mean it's not going to be even greater profits in another 3 weeks. So I think that the gold market has a tremendous amount of long exposure that the professionals in the market have said, we're 2 months overdue for some profit taking. And that any round of profit taking is probably going to wait until after the election.
Now, would it not wait a little bit longer? Like if it were to be apparent that it's going to be a Harris presidency, the GOP seems to have all sorts of judicial challenges to election laws across all 50 states. Is that not up to delay that to say December or January until all that kind of dust clears?
Yeah, and we were talking before we started recording, the GOP has already filed 90 lawsuits across the country challenging election procedures even before the election. We know because they've told us that they have further filings and legal complaints and seeking of injunctions in all 50 states that they're holding until after the election. And they have said, almost regardless of what the results are in the elections, we're probably going to challenge them. So that will prolong that post-election uncertainty. In the year 2000, we didn't know if it would be Bush or Gore until just before Christmas time. It was, about 6 weeks or maybe longer that it was not clear who was going to be the president of the United States. And I think that you can have a situation like that again, but it really depends on the vote. If it looks very clear that one side or the other is going to win, but there are challenges, those challenges will be paid less attention to by the financial markets. If it's much less clear who actually won, those challenges and the existence of those challenges won't be handicapped the way they are otherwise. They will be given much greater credence by financial markets, and that will perpetuate the volatility and uncertainty across financial markets.
So a close election will continue the volatility that we're seeing going into the election.
Yes.
Let's look at a possible scenario then. Let's say that the election comes, the votes are tallied, and it looks like it's going to be a Trump presidency. What kind of poison pills could the Biden presidency in the waning days of its, power from, election day to inauguration, leave in its wake for a potential, Trump presidency moving forward?
Your question is, what would a potential Trump presidency mean beyond the transition period?
No, leading up to the transitional period, the Biden administration is still in charge. There's all sorts of geopolitical things and domestic issues that are there. Could the Biden administration do things that would effectively be a poison pill that the Trump presidency would have to deal with once it took power? And is there anything that could happen through that period that could affect the precious metals markets?
I think, it's highly unclear how it'll all shake out because we don't know what the vote will be. But and I do think that a Biden administration wouldn't necessarily be trying to poison the well, by passing laws that would be problematic for Trump. I think that the Biden administration has a number of things that it would like to move forward, but it's too timid to do so now in advance of the election because it is afraid that that would cost the Democrats votes across the ballot, not just with Harris and Walz, but also down ballot, down ticket. So one of our assumptions is that there will be some major domestic, fiscal, and international initiatives by the Biden administration in that post-election period, regardless of whether it looks like Trump or Harris is winning. If it looks like Trump is more likely to succeed than Harris, I think the Biden administration would be more aggressive in pushing forward various executive orders and also some legislative things.
Yeah, we've talked about the mayhem after the election. Let's go and say now we have a clear winner. And at this point, it's binary. It's either going to be a President Harris or a President Trump going forward. Let's contrast what we know of and anticipate with each presidency and talk about that in terms of the precious metals markets.
Well, before we get into each of them, let's just sort of create what CPM Group sees as the longer term environment for precious metals, political, economic, fiscal. Since 2000, we have had this long-term economic and political model that we've used in forecasting all of our commodity forecasts, in which we have laid out the idea that there would be greater economic, political, and fiscal and financial market uncertainties, not just for a couple of years, but for decades. And for 24 years now, 25 years now, that's exactly what's happened. And in that environment, investors have rediscovered gold as a form of wealth preservation and capital appreciation. So we've seen more investors buying more gold in more parts of the world for a longer period of time at higher prices than ever before since 2000. It waxes and wanes a little bit, but that upward shift in the investment demand curve has occurred and has persisted for a quarter of a century, and that has pushed the price of gold up. Similar situation in silver. Our expectation, that's the environment in which a Harris or a Trump will win. Regardless of which one wins, that upward shift in the investment demand curve, predicated on the concept of persistently greater economic, financial, and political problems and issues, will continue. So it's a matter of degrees. If it's Harris, our expectation is that it's more of the same. So we still have, 1.3, $1.8 trillion deficit every year, rising US debt, decreased international cooperation among countries, some bad economic policies like tariffs and other economic incentives against importing goods and services. So independent economic analyses have said, if you're looking at a Harris election, you're looking at $1 to $2 trillion deficits and more of the same that we've seen really over the last, say, 20 years. With Trump, you're looking at, again, independent economic analysis have said you're probably looking at a $5 to $6 trillion deficit. Absolute explosion in the amount of U.S. Treasury securities being sold, primarily to the Fed, to finance those deficits. And so you have a much more tenuous economic situation. You have a much less predictable international relationships, and you probably have more idiosyncratic domestic economic policies. Higher inflation, a 200% tariff on goods and services coming in would be devastating. The reality is that it's importers, not foreign exporters, that pay those tariffs, and the importers pass those costs on to the consumers of those products. So tariffs, and both sides are talking about tariffs, but the Harris people are talking about smaller tariffs. Tariffs are bad. They're bad for business. They're bad for economic growth. They're bad for international trade. They're bad for real GDP. And they raise the costs to consumers and businesses. They are bad. So it's a matter of degrees of badness. And that's going to be the situation. So, it would look to us as it does look to other independent, unbiased, market neutral, politically neutral economists and economic groups, that they're both going to be bad for the US economy, good for gold and silver, but a Trump administration would be much worse for the economy, much worse for the country, and much better for gold and silver, because the uncertainties and the economic and social and political dislocations will be that much greater. So that's the difference going forward over the next 4 years.
Okay, just to sum that up to make sure that I've understood this correctly, the Harris administration is likely to continue tariffs and continuing to execute the current trade war with China, where Trump would likely exasperate it and accelerate the prosecution of that trade war, and making a bad situation even worse, which would, cause the precious metals markets to respond accordingly.
Yes.
Well, last question. Between now and the next 6 months, is there anything on the horizon that you think that could cause any sort of major correction to the stock market and the precious metals markets by default? If the stock market goes down, you sell what you can, right? Is there anything that you could see that could, politically, that could precipitate such a sell-off?
Well, there are several things. One of them is, the Ukraine government has made some significant military gains, and it could accelerate those gains and get to a position where, there's a lot of dissent, as I said earlier, within Russia. And you could get to a situation where Russia is willing to basically get out of Ukraine. That would obviously have a big negative consequence for short-term gold prices, a big removal of a lot of uncertainty and international tension. So, in that kind of environment, you could see gold prices come off very sharply. There could be some de-escalation in the Israeli conflict with Iran and other Muslim entities. That seems less likely to occur than a Ukrainian victory in Ukraine, but it is a possibility. There are some things that are around. They're not exactly black swans, but they are what we would call our secondary or tertiary scenarios that could lead to significant moves higher or lower in gold and silver prices. Obviously, stronger economic conditions could be considered positive for gold and silver, because when people are making more money, especially in the late stages of an economic expansion, they're very nervous about where they put that money. Some of it would automatically go into the stock market. Some of it would be then pulled out and parked into gold and silver as portfolio diversifiers. So, there are all sorts of things that can change and nuances in there. We had a client once who we supply our clients now with 3 scenarios when they want scenarios. We used to do 7, and it was just too cumbersome. We had one client who was running like 30 different economic scenarios, and you could easily do that. And once you get your computer set up to do that, it's very easy to tweak it and say, well, what happens if this, that, or the other thing occurs? We've been talking mostly about the US and to a lesser extent, some major crises like the Middle East, Ukraine, Russia, and China. But there are all sorts of problems throughout Africa. You've had several major coups in Africa this year. Those coups, the militaries have been supported by Russia and by the Wagner Group. Russia and the Wagner Group largely are being paid in gold by the militaries that they are supporting in those countries. Africa is ripe for further problems. You also have problems in Latin America that are bubbling up and around. So you really have an unsettled world where there could be all sorts of things that may surprise markets, but probably in retrospect, we'll all say, well, that shouldn't really have surprised us.
No, as we started this conversation off, we're certainly in uncharted and interesting times. I think the only thing we can do is grab a big bucket of popcorn, sit in our easy chair and turn the news channel of your choice on to watch it all unfold and hold on tight.
I participated in a Doug Casey conference in second quarter of 2008 when, Bear Stearns had gone bust. The gold price had risen from like $900 to $1,000, fallen back to $900 and was starting to rise again. And it was this crisis and opportunity conference. And I was there. He invited me as, he said, the voice of the institutional voice. And there were all these gold bugs who were talking about how there was going to be total destruction, and everything was going to collapse. And at the end of the conference, they had this panel with like 6 of us. And one of the questions was, is this the end? And they went through the first 5 guys who were all these promoters of gold, that have been waving their arms in the air saying that the world's going to collapse, the Fed's going to collapse, the dollar's going to collapse. We've got too much debt and deficits. And they all said, yes, this is the end. Yeah, this is the end. And they get to me as the 6th person, the odd guy out. And they say, is this the end? And I said, the end of what? This isn't a movie. It's not a book. It's real life. Let's talk about, if this is the end, what is the end of? And what does tomorrow look like? Right? And my view is it's not the end. But you have banking issues, you have government issues, you have political issues, and we will fight through them and they'll be papered over and we'll go forward, which is, from the hindsight of 16 years later, that's exactly what's happened over the last 16 years. But we went through this and it was amazing because only James Turk had something substantive to say. The first 4 guys say, it's the end, but I'll be okay because I own gold, which is like the most meaningless thing you can say. Right? And then James Turk said, well, I do think it's the end. And I think that the US government's probably going to have to nationalize a bank or 2. And then he comes back to me. I said, that's it. I mean, you guys have missed 2 of the biggest bond markets in history, 2 of the biggest stock market rallies in history, because you're waiting for the end. And in the end, they nationalized 2 banks, which they didn't. What they did is they arranged mergers of those banks into stronger banks. I said, that's not the end. That's just like, a bump in the road, which is exactly what it's been. And you look at GDP relative today to where it was in 2008, it's a multiple of it, and we've had 16 years of economic activity since that time. And some of those guys are still waving their arms in the air saying, this is the end, things are going to collapse. Things don't collapse. That said, you should have gold and silver in your portfolio. Some of your wealth should be denominated in gold and silver. You shouldn't have all of your assets held by one bank or brokerage house. You should have a diversified counterparty risk, and you probably should have some of your assets held offshore. Those are the logical things that you do to protect yourself from foreseeable and unforeseen problems, whether they're personal problems like a broken leg or a car that breaks down and needs replacing, or regional problems or national problems or international problems. You should have gold and silver to diversify your exposure and your wealth. And it's only logical, but it's totally illogical to say, oh, this is the end. And it's very interesting. I was talking to somebody the other day and I said, I've got to find it because I found this book by a psychologist who studied people who belonged to doomsday cults. And he studied them from the perspective of what do they do the day after doomsday doesn't occur. And you've had several groups, it's going to be Y2K, or it's going to be the Inca calendar ends, or I've read the Bible backwards, and it says that the world's going to end on September 15th, 2005. And it's very interesting because what they do is they immediately find some other doomsday to latch onto. Clearly, they need to believe that doomsday is around the corner. And if the cult that they believed in was wrong, it's not that doomsdays don't occur. It's that they had the wrong cult. Yeah, that's not a logical way to analyze what went wrong with your investment ideas. Yeah.
No, it's not. And as you were telling me this story, two thoughts that crept into my mind. One was a quote that I love from the great Art Cashin, the Wall Street trader. He said, "Never bet on the end of the world. You're only right once, and there's nobody to pay off." That's always been one of my favorites. And there's a Creole French saying, it sounds eloquent in the Creole French, but it translates to essentially, if you spend all your time worrying about the end, you forget to live in the now.
Mhm.
And that's where I landed on all of that. If people
Yeah.
want to follow the CPM Group and your musings and thoughts on the turbulent times that we're going to experience over the next 6 months, how would they follow you?
CPMgroup.com is our website, and you can, get all kinds of free reads and videos there, as well as buy some of our research or consulting services. We have twice weekly YouTube videos that are free and open to the public on YouTube. You just go to YouTube and type in CPM Group or just CPM Group, and you'll get to them. And you can always send us an email at info@cpmgroup.com saying, "I'd like to talk to you about services you may provide me to help me invest more wisely in precious metals and commodities."
And I want to thank you for joining me to talk about putting some light on these kind of confusing times for people. And I look forward to us having more chats, because this isn't in fact the end.
Yeah. Yeah, we'll still be around in 6 months.
Absolutely. Thanks very much, Jeff.
Take care.
The Prospector News Podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.